show right now. Mr. Raju, great to have you today on ET Now. In a quarter of low credit growth, your advances have actually shown double-digit growth. What's driving this, and what will be your guidance then for FY26?
So we are given a guidance of 10 to 11% credit growth during the initial stages of this financial year. And we have a practice always in every last 3 years. The same thing what we are doing is every time whatever we are given the guidance, we surpass those guidance with a comfortable margin. We are very confident since beginning the year itself that this year our credit growth will grow in the double digit growth. That's why we are given that guidance of 10 to 11%. Our main thrust is on RAM sector. That RAM sector 2 years back we have shared with you that when our RAM sector was only 54, we thought of growing to 58% so that our average yields we can take care of that. And I'm happy to share with all of you that this June 30th, we have achieved that the RAM sector, our composition of the total assets, our RAM sector is 58%. And this first quarter also on a year-on-year basis, that our RAM sector has grown near to the 15%. Since we have given thrust more on the RAM sector, it is growing and it is contributing to us. But at the same time, we are also focusing on the corporate credit with the faster decision making, and we became one of the priority banker for corporate sector. That's why we are growing at 10%. But there is a scope for further growth in that, but we are little consciousness is there. That's why we are selectively choosing those things. We want to continue to grow at 10% in the corporate and 14 to 15% in RAM sector, so that overall credit growth for this financial year, it will be around 12%.
Mr. Raju, focusing purely on your financials, it's been a good quarter for the bank in terms of profitability and your asset quality, but we have seen a decline in the net interest income. Could you help us understand the reason behind this and also the decline that we've seen in margins? On the back of that, what's your NIM outlook going ahead?
See that the February first week, the RBI has reduced their repo rate 25 basis points. Then April first week, again, one more term, they reduced that to 25 basis points in the repo rate. And in the June 7th, again, the RBI has reduced 50 basis points repo rate. Out of total our loan book, 45% of loan book is linked to the repo rates. In every time, whenever the RBI has reduced the repo rate, we have passed on that benefit to the repo linked rate borrowers within 1 week time. So for the suddenly reducing that 100 basis points, and it the same thing as from existing all borrowers which are linked to the repo rate has have an immediate effect on our yield on advances. Whereas simultaneously when we reduce the deposit rate, that deposit rate we cannot reduce from existing deposits. Existing deposits will carry the same rate of interest till that contract period is completed. And June 9th, we have reduced the deposit rates, which will have impact in the coming quarters. That's why our yield on advances in this quarter has reduced almost 36 basis points, whereas our cost of deposit was stable at 5.74. This is the one of the reason that our NIMs have come down in the first quarter. But however, the rate of interest on the deposit, whatever the repo rate reduction has happened on the loans, for passing on the same to the depositors' interest, it may take 6 to 9 months period. So we expect that it will stabilize our NIMs from third to fourth quarter onwards.
All right, Mr. Raju, help us understand what's your outlook on the deposit growth going ahead. How do you see this number shaping up? There's balance in the savings account as well. Give us some sense that with respect to the competition, how are you seeing this number to pan out going ahead?
No, definitely the low cost deposits at this moment, when they have an alternative investment sources like a stock market or the mutual fund or any other things, it's a very tough job for the bankers to garner the low cost deposit. But garnering the term deposits is not a tough job for the government banks, because even our bank for the last 4 months, not even 4 months, we already garnered incremental growth of more than 20,000 crores in the retail term deposits. So we have waived that charges. Of course, we are the first public sector bank to waive that, other than the State Bank of India. And of course, afterwards, all banks have followed that. That the reason behind that is since under present conditions, canvassing a CASA is very tough for low cost deposits. We want to incentivize the existing customers who are dealing with us so that we can attract the new customers by giving this incentive. That is helping us. It has started helping us. Already our SB individual is growing almost 6%. Under present circumstances, growing at 6% itself is a remarkable journey. And every month we are able to achieve that our set targets in the SB individuals. Only thing our concern is because institutional deposits is slowly draining out from the system. That is creating a gap in the CASA. Otherwise, individual deposits, it is growing month on month, even quarter on quarter, because of maybe our various products, new products we have launched. We have initiated several digital initiatives. All these things may be bringing the customer into our fold. But SB individuals, there is no concern. But definitely institutional low cost deposit, we have concern. For that, we introduced one new scheme targeting for the institutions like a True Edge. This scheme is targeted for the only the institutions who can deal with us, either the SB account or current account. For them, we are providing a free software for their fee collections or the gateways or several benefits. We are extending it. We hope that product will be successful and give us some more benefit in the low cost deposit.
Right. And Mr. Raju, when would we see Canara, HSBC and Rebecca IPO hitting the markets?
We got all permissions, sir, including NSE and BSE. Only we have to get the final permission from SEBI, which we are expecting in any time. It may come another next 15 to 20 days. That is our expectation. So once that permissions have comes, then afterwards again it takes 1 or 2 months for completing all the road shows and all those things. So I'm expecting that one will be listed in this, will come for the market in this last fortnight of the September, and the another one will come in the October month. These two, that's presently expecting it.
That's the word coming in from the management of Canara Bank. Mr. Raju, thanks so much for joining us. We'll let you